Governor Sethaput, how is Thailand doing in terms of its economic situation and the forecast that the Bank of Thailand is giving to 2024?
Yeah. Our interim guidance for the economic forecast this year, which we put out the last MPC statement, pending our official release at the next MPC meeting in April, was that we expect to see GDP growth this year in the range of 2.5 to 3%, which is not great. It's a bit lower than what we had forecast, but it's still growth, positive growth, and it's an ongoing recovery. We have to say that again. The recovery has been weaker than we had expected. I think we're being hit both by a lot of structural headwinds as well as weaker cyclical tailwinds. A lot of the things that we expected to see in terms of a stronger recovery in terms of exports haven't panned out the way we expected. And I think we're facing, again, a lot of structural challenges as well.
As the governor of the central bank, what's your main concern now?
Immediate
or medium term?
Okay.
In the next year or so.
Yeah. Okay. My immediate near-term concern is again has a lot to do with what's going to happen in terms of our manufacturing and exports and tourism, because those are the key drivers for our economy right now. Domestic consumption has held up quite well, but the things that we're looking forward to try to help sustain a recovery are exports and tourism. And a big player in that and a big key factor in that is China.
Of course.
So yeah, we're paying very close attention to what's happening in China and how it affects us, both again in terms of our exports to China, also to third countries, because we see increased competition from China in third countries that we export to,
yes.
And also in terms of the recovery in tourism, because we see the tourists coming back.
Yeah.
But they're spending less, so that's another constraint on us as well. And we also see, again, I think that China seems to be encouraging their people to
spend
travel
less?
more. Well, also to spend more domestically,
yes.
to travel domestically rather than go overseas. So I think those are some changes that will affect us in terms of the outlook.
So Thailand's reliance on China's economy is quite heavy.
Yeah.
What is the way out of that? I mean, it takes time, of course, but there must be some kind of advanced planning to see whether Thailand can balance its baskets of interest.
Yeah. In the near term, again, given where we are, and I said your first question about the near term outlook, so much of it is tied to what happens with China, because China is about 12% of our exports, right. and about a third of our tourists, and tourism is such a huge footprint, not just in terms of headline GDP, but in terms of employment and incomes here in Thailand. So it has a big factor. But the thing that will help is again to engage in medium-term structural reforms, to try to find new engines of growth, to try to diversify again our reliance. And on this, I have to say, Suthichai, I think we have some advantages on this front. We just need to realize them, actualize
you mean we have
them.
advantages that we don't know about?
No, well, we know about them, but we're not taking full advantage of them as we should.
Such as?
As we know, right now, there's a lot of geopolitical tension, right? And there's this talk about friendshoring, nearshoring, reshoring, all that stuff. And the dangers that the world is trying to bifurcate, in a sense, along the lines that we know. But if you look at that, I would argue that Thailand we're actually not that poorly positioned to take advantage of some of those, that realignment.
Right.
Why? Because if you look at Thailand, we're very close to China for the reasons that we cited.
Sure.
I think there are very good relations.
And we don't have that many conflicts with China compared to many other countries.
We don't have an issue in the South China Sea, unlike other countries with China. We're a good friend to China. I think the relations are very good between our countries. We're also, by history, by tradition, by many things, a very, very close friend of the United States.
Yeah.
We are one of the few, one of not many, I should say, major, that has a status of being a major non-NATO U.S. ally.
Right.
And our relations go back, for
190 years.
Yeah. And I think the whole cooperation during the Vietnam War, the whole Cold War, made particularly on the security front between the U.S. and Thailand, there's this element of trust and long-standing closeness.
So why are not we taking enough advantage of both major powers, superpowers?
Yeah. The one I would just add onto that also is it's not just with U.S. and China. If you think about the other very important player out there, Japan.
Japan, of course.
Yeah. Japan, for us, again, Thailand is the country which has the largest stock of FDI investment from Japan in Asia, outside China.
Yeah.
After China, it's us.
Yeah.
And so, the Japanese have a very, very big, well-established footprint here. And we have, again, very close relations with China, with the Japanese. I think Thais love to go to Japan. This is natural affinity between Thailand and I think and Japan. So we're tied in potentially to all the major.
They all love us, but we have not taken enough advantage
exactly.
of the affinity.
Yes, that's the.
So what have we not done right?
Yeah.
In this connection,
we haven't made ourselves sufficiently attractive to those production networks. So, for example, I think one thing that we've seen, which is unfortunate, is we've seen over the years that our market share, for example, in attracting foreign direct investment has dropped steadily over time.
Yes.
We know there are a lot of bright lights out there that are very attractive. People are in love with the Indonesia, Vietnam story. There's a lot of FDI going there.
Right.
There's not as much coming into Thailand. But again, I think given that now there's probably going to be a greater emphasis on resiliency.
Yes.
Not just like efficiency and trying to get the absolute lowest cost, but to a place that is resilient, that's safe, that's stable, that's there.
Sustainable.
Yeah. Those things are important, but there are things that we need to do to make ourselves more attractive. You mentioned sustainable. That's a perfect example.
Yeah.
One thing that's very important for foreign direct investors is to try to make sure that their carbon footprint is limited. And so energy is a very important part of that. So trying to make sure that a sufficient percentage of our energy is from renewable sources is very important. For foreign investors to come to Thailand. Another aspect which I think we've been lagging as well is in signing and implementing free trade agreements. When countries want to invest, obviously they want to be able to access third country markets, and other countries in the region, particularly Vietnam, has done a very good job on this front. We've tended to lag a bit. So there are things like that we need to do. Another example is trying to liberalize our regulatory and legal regimes to make it more business friendly, more attractive to foreign investors. And Indonesia is a good example, I think, of a country which has done made good progress on that. So these are, again, the kinds of things that we need to do, and there are also examples that other countries have done that I think we need to do in order to actualize and realize those opportunities that I think we have, these advantages that we have.
Your relations with the Prime Minister has been in the headlines, both locally and internationally. How do you describe your relationships with Prime Minister Sethaput?
Oh, as I mentioned, they're professional and cordial.
Cordial?
Cordial, yes. It's never a good thing, I think, when the central bank is on the front page of the newspaper.
No news is good news.
No news is good news, yes. Yeah, so it's not something that we...
So what basically is the issue between you and the Prime Minister?
Oh, I think it comes from the fact that we have different roles to play and that we wear different hats. I think it's an issue that we see not just in Thailand, but I think in many countries, where there's this natural tension. I called it a creative tension.
Creative tension. You don't enjoy it, but it's creative,
it's
right?
Creative. It's there between the government and the central bank. I mean, the government obviously tends to favor growth. The central bank, by nature of its mandate, it tends to put a significant weight on stability.
Yes.
Governments tend to be shorter term in orientation. The central bank, again, tends to look at longer term issues. And then by nature, we need to look at things in a much more holistic fashion, take into account unintended consequences of different measures. So I think that leads to that difference of opinion and that creative tension that we mentioned.
Prime Minister describes your relationship with him as having mutual respect. I think that says a lot about the official relationship.
Yeah.
But your staff, Central Bank and NESDB, the National Economic Planning Agency, and the Finance Ministry's, what is the agency that they have?
The Fiscal Policy Office?
Fiscal
FPO.
Policy. Your staff and their staff work together.
Oh, absolutely.
Yes?
Very, very closely. We're
and you share
communication.
information?
Yes. We're in contact regularly. And I have to say that because we're operating pretty much off the same set of data.
Yes.
Our views and outlook are broadly in line. I know there's been, again, in the press and whatnot, some have written about how the forecasts and what the outlooks are not aligned.
Right.
But I would argue, and I would like to try to point out that a lot of times these differences, in terms of, for example, the outlook and the forecast that the different agencies have, they occur because they occur at different times. So, if someone has they did their forecast, X months ago, that forecast might be on the high side because things have turned out a bit softer than we had expected.
Right.
And those that did the forecast more recently, those will tend to be a bit lower. So if you compare those two different forecasts, because they're at different points in time, the forecasts look quite different. But if you look now, for example, where pretty much operating with the same data set and at the same time, I think that the forecast for this year for the key agencies, us, the NESDB, and the Ministry of Finance, broadly in line. Like I said, we haven't put out our official forecast yet, but our interim guidance, 2.5 to 3% for this year, is again broadly in line with what the NESDB put out and also with what the Ministry of Finance put out for this year as well.
Well, you're under great pressure from the government to reduce interest rates. How do you react to that?
It's part of the job to be under pressure.
How do you explain to the government, I would say the politicians, that you have your role to play and they have their own role to play? But they seem to think that you are not being realistic, that you do not understand the common people's problems. You people are up there in the ivory tower, right? So are you up there?
I think, again, that difference comes from the fact that we're wearing different hats and we have that different emphasis. The short term versus long term, right? Looking at growth versus stability and how do you weigh those things. That's what's accounting for the difference in opinion regarding the policies. But again, in terms of explaining our policy stance and our policy decisions, which again I would like to emphasize are the policy decisions of the Monetary Policy Committee, not just me or the Bank of Thailand, because the Monetary Policy Committee in Thailand, which is fairly unique actually, it's not the same as with other countries. We have seven people. We have 7 people on the Monetary Policy Committee. What's different in Thailand compared to a lot of other countries, a lot of other central banks, is there are more outside members on the committee than there are internal Bank of Thailand people.
Is that the rule?
No, it's by law in Thailand.
4 against 3.
Yeah, exactly. There are 3 internal people, me and then 2 deputy governors, and then the other 4 are from outside.
Who chooses the outsiders?
Our board, the Bank of Thailand board chooses the composition of the Monetary Policy Committee based on recommendations from us, from the Bank of Thailand. But which is quite different from a lot of other countries where they're more internal people than outside people. So again, I want to emphasize that the decisions that are taken are from the Monetary Policy Committee, not just from the Bank of Thailand or at the behest of the governor. I cannot, in principle or in practice, dictate what the interest rate will be.
So any decision has to be from the committee, not.
Oh, absolutely.
I see.
Yeah. Like I said, it's certainly not a unilateral decision.
So you don't think lowering the interest rates has anything to do with the trying to boost the economy, to stimulate the economy, as the government has suggested? They are suggesting that if you cut interest rates, it would stimulate the economy. But you're saying that it may not be that direct, the relationship.
No, what we're saying is it has to be balanced with a lot of different things. The framework that we have for making interest rate decisions is what we call our flexible inflation targeting framework. We look at three things primarily when deciding that. We look at growth, obviously, and growth, we would like to see growth be close to what we feel is our long-term sustainable rate of growth, which based upon our latest estimates and whatnot is ballpark about 3% real GDP growth. We look at inflation, and for that we would like headline inflation to be within our target range, which is 1 to 3% headline. And then we also, very importantly, need to look at financial stability. Mm-hmm. So when we decide what to do with rates, we can't just look at just any one variable like GDP growth and focus just on that. We need to take a look at the totality, take all these things into consideration. So getting back to your question, would lowering rates tend to have a stimulative impact on the economy? The short answer is yes, it would tend to have a stimulative impact on the economy. But one, that has to be balanced with the other considerations that we have on the table, notably things like financial stability, because the other thing that we have that is of quite high concern for us, we have very high level of household debt. Household debt is like 90+% of GDP. That does not bode well for long-term financial stability. We would like to see that get back on a more sustainable path. And part of the reason that debt has gone up to that level so rapidly in the past has to do in part, either in large or small part, to the fact that rates in Thailand have been low for so long.
Yeah.
So that's first point, that we have to balance it with the other considerations, things like on the financial stability front. The second point also is the stimulative impact, getting back to more directly to your question, may not be that large. Why? Because if you look at the reason that growth has tended to underperform, it has to do with factors like our exports are not doing as well as we had expected, and that has a lot to do with structural factors, I think.
Yes.
That China is not importing a lot of the stuff that we're exporting, particularly on things like petrochemicals and chemicals. It has to do with the fact that tourists aren't spending as much as we had expected, which doesn't have a lot to do with interest rates. It has to do with the fact that government disbursement has been a bit below expectation, again, which doesn't have much to do with interest rates. So if you look at the reasons that growth has underperformed, it doesn't have that much to do with interest rates. Interest rates would help perhaps offset some of that slower growth from boosting consumption and possibly investment at the margin. But if you look at consumption has been growing at a rapid clip. Last year consumption grew basically at record levels. So the additional boost that you would get from consumption, probably from lowering rates, is probably not that much, and also probably not that desirable if it comes at the expense of increasing household debt, which is not something that we would like to see. So it's again, taking that totality of factors into account and taking into account some of the longer term implications that caused the majority of the MPC members to decide to keep rates at where they were, at 2.5%. Which in the press is usually referred to as decade high interest rates. But I would also point out, while that is true, it is also true that it is also among the lowest in the world. There are two countries out there that have interest rates, policy rates that are lower than ours, which is Japan and Switzerland. All the other countries have policy rates that are higher than
good company.
Yeah, I don't know. But the point is that, compared to other countries, it's not, alarmingly high. It's certainly not the level that we see in other countries. But again, I'm not saying that that's the main factor in deciding what to do with rates. We will look first and foremost at domestic factors. But they always like to point out in the press, decade high. Yes, decade high, but also...
It is true, but
yeah.
The other side is also true.
Yeah.
Thank you very much, Governor Sethaput.
Thank you.